Hey YouTube. Hello everybody. Thank you for being here this beautiful morning. It's 9:03 here in Hill Country. Beautiful morning here. See what's going on in the market. Mark, what are you doing? Market's chewing up the last bit of your theta on sold options. Well, that's good. You want the market to chew up that theta, right? All right, I'll remember to share the screen. Let's look here at the market itself. Nice rally overnight. Nice rally overnight. This bullish gap from Friday the 13th, it was after the Friday the 13th, before that Monday. It was the weekend after Friday the 13th. Is signified by this blue box right here. Well, sure enough, when price returned there were still buyers there, and they sent it out the other way. So I suspect if price returns there again, there might probably be buyers there again. We'll see, but every subsequent time the price goes back there, it's less likely to be buyers. At some point, you might exhaust that. You will exhaust that supply. You may have exhausted all the buyers yesterday. All right. Well, let's look at NASDAQ. Nice overnight rally. NASDAQ had a gigantic, beautiful trading range of 21.8 that they had fallen into. They're trying to break out of that right now. So they have a small range developing up here at 22 something. Anyway, we'll see if they can get. Bulls obviously want to get it up there. Here's the Bitcoin bulls trying to get it going. Bitcoin's just in a huge balance here at 104. 10 years at 4.4. AMD's up, not 10%, just 4%. AMD's just, look at that thing. Even AMD's up 3.54. Wow. OARC's been having a great, ARC and OARC have been just killing it lately. One of you guys knew about it because right before ARC started blowing up, or somebody's talking about it, I kept getting all these questions about ARC, and then sure enough, a week later, it's blowing up. Anyway, Coinbase, look at that. Now the question is here, you can actually see reversion to the mean happen. Are they going to is it going to revert to the mean? If it does, you'd want to buy options maybe for next Friday and target 250 if you thought Coinbase would revert to the mean. Or go out 2 weeks or whatever, but that's obviously the mean right there is 255. Put a put fly right on top of that 255 strike. Would be a decent way to play a pullback, right? Anyway, all right, that's enough. Let's look at some other stuff. High yield technical analysis. Let's see what's going on out of the 82 funds. Sorry, Jackson. I always kick Jackson when I stretch my legs out. Sorry, Jackson. I didn't mean to do that. Okay. The repairman for the raccoons is back this morning. So the raccoons, air conditioning doesn't work in parts of the houses, and it's because the raccoons have chewed a hole in the vents. So they're up there. The raccoons are chilling in the attic. They've got a hole chewed through my vent, and they're up there just loving life. They're probably up there watching the ball game, smoking cigars, playing poker. They got air conditioning in the attic in Texas. I mean, what kind of great life is that for a raccoon, right? Anyway, we didn't kill him. We had somebody trap him, and they put a one-way door, and so hopefully they can only go out of the attic and they won't be coming back in, and then we'll fix the ducts. But anyway, all right, guys, that's what's going on in Austin. We have a high wildlife population in Austin. I think it's because I live in a freaking old I'm like a hillbilly, and I live in the side of a hill in an old rock quarry. There's probably I'm looking out my window. There's probably the street behind me is like 50 foot higher than me, 5 stories higher than me. I have a green belt between us. Just living in, it's just rugged land back there. I mean, I see the other day I was looking out my window. We saw a freaking like a 10-foot long snake. Um, I see possums, raccoons, rats, deers, fawns, foxes. I mean, I grew up in Oklahoma. You think Oklahoma has a lot of wildlife. My whole time I was in Oklahoma, I saw one deer. I was jogging one morning and a buck came running across the road. And it was beautiful. Now I see a deer every morning. I see 10 deers every morning. Anyway, all right, guys. Well, let's see what's going on in the high yield technical analysis. Let's make sure this is lined up right. And let's look at our old chart. Don't forget, you can check this out anytime, 24/7 at maxconvexity.iagon. It's IAGON.net. Iagon is a DeFi token, and I'm buying SERP space from them. And anyway, it's a great technology, and I really like it. It's decentralized. They can't mainstream media can't shut me down. I know Dan's going to be happy to hear that. No mainstream media outages here because we are on DeFi. Of course, we're still using the internet, which is control. We're still using Spectrum, which anyway. All right. Well, we need to work on that. We need to get Starlink or something. Anyway. All right. Well, let's see. MSFY has just been absolutely murdering it. Just been murdering it on risk-adjusted reward. Look at that. 7.9 NFLP, second place. GPTY hanging in there in third place. It was in fourth place a few weeks ago. It moved up to third. MSFO dropped to fourth. It was in third. Now we have PLTW. That's a badass fund. We have Maggie. Maggie's good too. Both PLTW and Maggie haven't been around a year yet. So it's anyway, I should have asterisks on them. NVW, Chippy, AMDY, TSLP, Maxi, Coney, Carvani, AIPI, FEPI. FEPI's a good one. OARC. So I was writing a Patreon piece last night, and I mentioned FEPI in it. The name of the piece is "Why Does Curve Have Better NAV Return Than Yield Max?" So it's that one should be released later today. I stayed up till 2 editing it. But I'm going to release that video today. I think you guys will like it. Yesterday morning in Discord, we had quite a conversation because the market was closed. And I got up and we went back and forth for 3 or 4 hours talking about strategies. Yes, when the market was closed. One of the things what we were talking about is why does Curve's NAV return so much better than yield maxes? Why does yield maxes NAV suck so bad, in other words? And it's an easy explanation. Most of you guys probably already know it, but I'll write my Patreon. The Patreon's written below your level because I'm trying to bring new people in with Patreon. And then once you guys are here, then we can talk like we do with, like about anything. Anyway, I was kind of surprised. Scramble Anything is our resident expert in options around here. He knows a lot more than I do. He should have his own YouTube station. I've told him that a jillion times. He made a comment this morning. I was going to reference, and I just forgot about it. He was saying, hey, does anyone in Discord, he was saying, does anyone understand the price movements of SVOL? I wanted to talk about that on the morning show. So let's go look at SVOL real quick. We're going to weave over into the SVOL lane. All right. Because I thought that was a good question. But if Scramble doesn't understand it, then a lot of people don't. Because Scramble's more into the option trading and less into the high yield stuff. But anyway, but these guys have changed their perspectives. They were doing great. They were doing great for a while, and now they're sucking again. And I thought they added upside, which is always great. But whatever they did is not hurting them, not helping them lately. You can see assets under management have been coming out. They were at 40 million. Now they're down to less than 10. Or I'm sorry. No. They were at 1.2 billion, and now they're down to six or 800,000, or 800,000. Okay. Well, anyway. Okay. Their biggest holdings are gold. I mean, that should be doing, they have 10% gold VIX future. So they're short VIX futures. Looks like a fund of funds, and they're short VIX futures, but they're long bonds through their Simplify. They got AGGH, which is ag. I never heard of ag until Jay mentioned it last year in New York. Jay kept talking about ag. I was like, what's ag? I thought it was some kind of agricultural ETF. He goes, it's the aggregate bond fund. It's the benchmark for the SPY of bonds. I never heard of it. I'm not into bonds. I always use BND for the SPY of bonds, but no, pros use AGG, the aggregate bond. Well, anyway, AGGH is a variation of that, probably a yield fund variation of that. Then I really like this one, SPU. This is similar to my GOAT spread because it somehow has extra upside. But that's just a fund called Simplify. It's the SPY plus upside convexity. You own the SPY plus you own some kind of upside. QIS. I want to get Mike Green on here to talk about this one. This is a hedge fund. This is a true hedge fund replication strategy. I don't understand it, but I'm fascinated about it. Maybe I'll ask him to be on the show. That'd be awesome. He's on people's show all the time that just have 2,000. I saw him talking to somebody the other day that had 4,000 subscribers. I mean, we have 3,600. I'd love to get him on the show. I could probably talk him into coming out with the GOAT spread. All these freaking guys over, that I know are too conservative or whatever. Mike would do it. I think Jay's too scared to do the GOAT spread. I think he's too scared. He's scared of the success it would have. But that's all right. Mike will do it. We'll get Mike to do it. Don't worry about it, Jay. We'll get Mike to do it. But yeah, I don't have any idea. They've changed their formula. So, but anyway, let's go back to what they have. 50% is just a long bond contract. But then at the same time, they've shorting futures with 50%. So it's a long bond, short futures. But then they have something to offset the futures. They're short futures, but then they're long other stuff somewhere else. Excuse me. Let's check out. We're going to weave over into the QIS lane. I'm bored with what I was talking about now. Let's go to QIS. This hedge fund replication strategy. It looks about the same as SFOL. I mean, just anyway, I guess a lot of stuff's looking like that lately. So it pays no dividend, 2.6% dividend. Doing terrible. It's down 11% for the quarter, 13% year to date. Virtually no risk. The beta's 0.08. That's very, very low risk, but it's also very low return, as you guys can see. Right now, the low risk is manifesting as a low return also. So, and that happens sometimes. I'd like to get Mike on there to talk about it. But really, I would just have him on to talk about this because I know he probably wants to sell more of this. We'd ask him on to talk about something that he wants to talk about. But then I'm going to tell him, then I need to get him. Really what I think Mike Green, and I got the idea from him. I listened to him 4 years ago, and he talked about a strategy where a company or a hedge fund owns a straddle a couple of months out, and they're selling daily or weekly premium against it. You're long both ways. It's kind of how I invented the straddle strangle swap. I was trying to do what Mike Green did. Anyway, I wish he could come out with a fund that just was long volatility fund. I've tried to get Jay to come out that too. Just own a straddle a month out, sell a daily, and sell a daily straddle to pay for it. It's the old straddle strangle swap. It's I don't know why no one listens to me, but all right. The ones they came out with first are the ones that are going to be most popular, though. I mean, anyway, the ones I'm coming up with now are niche ones. All right. Well, anyway, all right, let's get on to something else. I'm bored with that too. So let's look at the premium collection thing. We looked at this the other day, but just in case anyone didn't see it, let's kind of look at Alti's. Let's go look at Alti's trades real quick and see how they're doing, or GPTY or whatever. Let's just go look down here. So what I usually do is I go to the bottom of this. On the left side of the screen, you'll see that's how much money every fund made on every day. On the 13th, Alti made $5 million big dollars, or they had $5 million worth of sales. They did $5 million worth of business. So let's look at, let's go look at that. Let's go see what the heck's going on. Then I'll jump over and see who else here and say hi to you guys. Where in the heck is this? It is called performance, Misty, raw data, process data. Let's go see where ULTY made that 5 million. Well, what do they have to give up for that? Oh, and that was actually a few days ago. That was on the 13th. Oh, let's just look at the most recent day, which is the 17th. All right. ULTY on the most recent day. I'll go down to the bottom here. The bottom line is 2.2. They only made 2.2 this day. Well, let's just pick out a big trade here. They sold $341,000 worth of premium on. I always get that. I always want to say it's Robinhood, but it's Restoration Hardware. Robinhood's Hood. Right? But I see RH, and I'm thinking Robinhood. At least I'm not saying Planeteer anymore. I said Planeteer for months. It's Palantir. There's no planet. It's a pallet. Palantir, not a Planeteer. Anyway, $308,000 worth of premium here. They're just selling premium everywhere. These are where they had their stock. These are where they had to buy new stock. See, that's buy, and that QSIP number, I could convert that to, who knows what that is, 7,800. I can tell you what it is sometimes. That might be applied APLD because they're also doing a 7,900 lot of usually there it is, 780. That right there is INOQ. They bought, sold short. Okay. INOQ, they bought that. They're doing 780 contracts. So they need 780,000 shares. They were probably exercised and lost their shares. Here they come back up here. I learned that trick a long time ago. You can just look at the size. Then you can go down here and compare with the other one. And it's the same thing as the QSIP number. You could also ask AI to look up that QSIP number, but it takes longer, right? Anyway, but you can see they also bought something 19,000 times. Same trick. We can go through here and figure out what it is. It's really not that big of a deal, is it? Let's see what they're doing on Tesla. Let's take a look at Tesla. Might be good to look at. So on Tesla, they're selling the 330 short, and then they're buying the 270. All right. So let's just go look at 370. Did I say 340? I already forgot. I already forgot. But anyway, we'll just look generically at a Tesla caller. You guys have a good day off yesterday? Juneteenth. Did you guys celebrate Juneteenth? We did not celebrate Juneteenth here. No. I mean, we're anyway. One of my favorite parts of Austin is called Clarksville. It's down right by downtown, and it has a lot of cafes and shops. It's an entertainment district. It's awesome. But anyway, it's a freedman's town. It used to be the part of Austin where the freed slaves, they developed that part of town in the late 1800s after the Civil War. They lived in that part of town. It's kind of close to downtown, but of course it's been gentrified, and it's the most expensive part of town now. It's literally the second most expensive part of town per square foot. Anyway, all right. And then right up the street from that house in a neighborhood called Old Enfield, there's a house that was built for a governor of Texas in 1850. The house was built partly with slaves. It was up on top of a hill, and it's about a half mile down the hill, closer to the river. And the bad part of town is the Freedmen's Village. But they lived there, and they worked in the big houses in Old Enfield. Old Enfield is the wealthiest part of Austin. Anyway. But yeah, that house is controversial because it was built by slave labor and it's been sold a bunch. But some people here in Austin don't like it, and they think it represents, and it's a plantation. It's the Old South. It has columns. It's the Old South. There's a rumor that Sandra Bullock was looking at buying it. It's been rumored to a bunch of people. There's a rumor right now that Elon Musk's brother owns it, and he is in Austin a lot. And a lot of people think that he owns it. It's a spectacular house if you'd like to live in a plantation. I'm not really so much on the plantation vibe, but anyway. All right, guys, let's see what else is going on. I was going to show you this caller, but you guys know what callers are. Let's just talk about who's here. All right, Marcus, what are you doing? What's your opinion on SFAL? Okay, we were just talking about SFAL. Yes, you cannot trust the mainstream media. That's why I'm going to show you guys this right now. So max convexity dot eagon dot net. They can. I'm cancel proof unless they talk to Spectrum, and then I'm done. We actually have Spectrum, and then we also have FiOS. We're getting actually FiOS. Spectrum's not fast enough to run the node. We actually run an eagon node in this house, so I have a vested interest in it also. And we get paid an eagon for running the node. Anyway, on SFAL, I don't know. We were just talking about that a little bit. You probably saw that before I mentioned it. Let's try to get Mike Green on it. SFAL has always been one of my favorite. Because I like the concept of shorting volatility. It's a hedge fund strategy, and I like complicated strategies. And what they're doing is they're harvesting the roll yield. In futures options or in futures, you can harvest future premium. There's premium in futures. It's kind of similar to how there's premium in options. Anyway, they have a strategy that harvests that. So, yeah. And then they kind of try to hedge it. So, I like it. What's not to like? Here's what I really like. Look at this. 20%. A 20% dividend. I'm kind of thinking 12 to 15 is the magic zone, about the most you can pay and have any chance of, for people that are concerned about NAV. And that was my whole, dude, I wrote so much about watch this show today. This is one of my best Patreons ever, but it's all about choices, and you have choices. And I talk in here about all the different factors. So my option bros will really like that one. But we cover a bunch of that stuff in there. But on SFAL itself, I don't know. I like 20%, a bit. I would put SFAL. SFAL is one of the first ones I heard about that everyone loved. When I got in here, people loved SFAL. People love FEPI. FEPI's a good one. And those are just kind of universally loved. Pay about 20%, have pretty good NAV retention, because they only pay 20%. It doesn't really have anything to do with what they're doing. But the lower, as you guys know, the lower yield, unfortunately, the better the NAV does, because that's just kind of the way it works. Anyway, all right. But on SFAL, I don't know. Let's compare SFAL to something. Mark, I'm trying to answer your question instead of just skipping it. Let's just look at SFAL to FEPI. Let's just compare SFAL to FEPI. They've both been around a long time. They're both pretty steady. They both pay around 20, 25%, something like that. So I think that's a good comparison. Let's just run it. Let's run SFAL to FEPI, and let's do it for just this past year, the year to date, SFAL to FEPI, and then we'll do since inception. Okay, so let's try to get a handle on this. Now, what I like about FEPI is it continued to appreciate while SFAL started to pull back. SFAL is like it got fixed for a while, and now it's acting like it's broken again. But you guys know what I mean. For a while, no one liked it, and then it started going crazy, and everyone loved it, and they changed their formula, but we didn't find out about it till afterwards. And our people probably got it right about here at the high, and since then it's petered out, where FEPI's gone up and kept going. Anyway, let's see if there's anything else, any other differences. SFAL paid $1.38 over half a year, so make that $260 on $20. That's like 12%. $260 on $20, 13%. Okay, so FEPI, on the other hand, paid $4.72 for half a year, so we're going to make that 9 1/4. 9 1/4 on something that costs $50 is 20%, right? FEPI has a higher yield, and so far this year has better NAV lately anyway. So, I don't know about SFAL. SFAL's, I don't know. Like I said, I really will. It won't hurt to ask. It looks like Mike Green will talk to anybody. I'll write him I'd like to do a show. I need to do a show that talks about one of his funds and send him the link and then ask him to be on the show. So maybe I'll do a review. I reviewed SBAR, but that was such a bad review, and I have no freaking idea what a barrier option. I tried to understand. I know how to use AI just like everyone else, but even the AI explanation still really don't have a handle on exactly what it is. So I would love to get him on here to talk about that. But maybe I'll make a video review on one of his hedge fund replication strategies. Send him the link on Twitter and then send him an invite to the station. Anyway, him and that guy named Jim Carson have informed most of my option bro type opinions. I watched them for years trying to absorb all the stuff they say and talk about. But Mike Green and Jim Carson are two of the best. There's another guy named Ben Eifert also that's wonderful. Anyway, all right. So you guys got my Max thing. Okay, Mark, you're happy with FiOS, only 2 short outages. Yeah, you can't trust the mainstream media. Hey, Jackson, Dan said hey to you. My dad, I think my dad's watching the show nowadays because my dad told me, give Jackson a pat for me. And my dad doesn't know Jackson's name, but it's good. He's watching the morning show. So, hey, Dad, if you're watching, thanks for tuning in. All right, guys. What else do we have to talk about? I always forget something. Let's look at, we've talked about premium collection. Let's look at the buffer report and make sure I'm not missing any like old fashioned stuff we used to talk about. Let's just pull up the old, I think it was called the GPTY verse. Yeah, it's over here on this one. Let's check it out. Just see what's moving. Now, one day I didn't check it out was the day the Coinbase was going crazy. I had no idea. My friend that's into Eagon that really runs that node, I was talking about Coinbase. He was going, well, yes, because they have there was some big announcement with a stable coin or something, a JP Morgan or something. Anyway, look at this. We have tons of outperformance in index land. You got to like that. Of course, when the SPY's only up 8 points, but let's see who's doing the best. Look at that FIRI, 5E, FEET, killing it. WDTE, killing it. T-SPY, doing great. SDTY, XDTE, great. On the bad list is XVOL or SVOL, down 1.3 today. I don't like how it leads on the downside. I don't like how much downside convexity SVOL seems to have lately. But it had a lot of upside too. I think they may have just added leverage maybe. And the leverage, helps them on the way up, hurts them on the way down, I guess. VYLD, GPTY doing great. LFGY looking good. Triple QY, Triple QT, all the ones I like. Well, I guess I'd only have ones on here I like. I mean, I like all of these. I mean, maybe not feet, but I mean, I like all of these. Look at USOY. Why didn't I get some USOY? Gosh darn it. I remember I tried to get XOMO to get some oil exposure, and that didn't work out. That's gone. I should have got USOY as soon as I started hearing about this war potentially breaking out. The one I really want right now, and we're going to check in on that next, that's where we're weaving into, is BLOX. BLOX is, and that's the next thing I'm going to write the next Patreon is going to be about the lightning spread. We need to talk more about the lightning spread. The lightning spread is something else. So the lightning spread may be better than the goat spread. I don't know. I did about probably 4 hours of back testing yesterday. But anyway, it's the same it's the same philosophy. Let's just say that. Okay. So Marcus, you love FIRI. Great. People are sleeping on it. It's just a fund of funds of other funds by not YieldMax, but other funds by the company that manages YieldMax. Right. And they have some great funds in there. But let's look at that. I mean, if you're looking for income, and and you don't want to do covered calls. I guess this does do covered calls because they own funds that do covered calls. But FIRI, Marcus says everyone's sleeping on that. Well, and I'm biased because I like the man. I like Mike Veneto came on and talked to me. I like Mike. He's a great guy. And so, of course, I'm rooting for him to do well. But at the same time, I don't have any of this. I mean, because I don't need any of it right now. I wouldn't be opposed to getting any of it, getting some of it. Okay, FIRI, they paid about 7% through half a year. They're a little bit more than half a year. I think they're trying to pay a percent a month. That's great. I just wanted to see what they have. So they have some title. They have some carbon BS, carbon collective short duration green bond. We aren't into the Green New Deal here either, but I'm just joking. MSTI. Is that not some MISTI related? Madison Short-Term Strategic Income ETF. Never heard of that. Then they have Riser. Now, Riser's something else. I love Riser. Mike Venuto was really high on this one. I just don't know much about it on that vets. And well, he's high on all of these. He's not, you know, they put their best things in here. That's why it's a fund of funds. This one's a good one. FIAX and GIAX are great ones. And they also have some triple QI. You got to love that. You know, everyone's thinking, why they have that? It has so much erosion or whatever. Well, then what they do with that, they use it just like I do. They probably just have a little bit of it to make their, you know, it's everything, you know, you don't have to go all in on it. I mean, but it's a good one to bring the average, to bring your average up, right? Anyway, so yeah, they have GDXY, and so yeah, it's a good one, triple QI. And what about FIRS? What do we think about that one? Is anyone? This is the Wealth Builder, so it's the same fund of funds, company that runs YieldMax, so title. No dividend, it's growth, but it's growing. Performance for the year is 7. Why is this not on? Why is this not on the max factor, right? If there's ever anyone not on the max factor, and you guys tell me about it, I can put it there. What do you think this one will rate? I bet it rates pretty dang good. I bet it rates pretty darn good. Let's just add this into the max factor. High yield T and A. Open that up. Add a new line, and now we have 73 in the database. I guess we should add FIRI also. Really, the max factor is trying to look at income funds, so I don't want to add FIRS. It's made to look at it. It can look at anything, but I think it judges more fairly on income funds. But anyway, I bet you FIRI does pretty well. Let's see. We will just insert a row. This is the slickest little thing I have ever done. I am so happy with this premium collection machine and this thing right here. You guys have no idea how happy I am with this. Okay, so divided by 0. That hasn't been out a year, so its risk factor only gets established after a year. So we got to think about it. Okay, so I got to manually set the risk factor. FIR. I'm trying to think of another fund that has similar. We'll just set it on 1. 1's kind of a neutral. 1 means it's as risky as the SPY. It's probably not that risky because it's so down 0.9. And then it'll, as it gets to a year, it'll update the risk factor. Anyway, okay. So now let's do this. But that's why I say when it has an asterisk, because I hand curate the list. Like, you know, but what I do is I go find another thing that does the same thing, and I see what their risk factor is. And I use that to inform my opinion. Okay, so let's see how that, if FIR, if it got in, if it made the list. Nah, it didn't make the list. I thought it might because it had like 9% total return. All right, so let's see what the problem is. There's the price. Has all right short-term momentum, but its medium-term momentum is turned negative. So that's hurting it. This is also hurting it right here. That's a wrong number. That's not even right. Hang on a second. It's supposed to say 7.63 there. Anyway, I'll fix it in. But if that was right, I bet it would be on there. And it says 1.47. Huh. All right, I'll have to look at that. I have no idea where that's even coming from. That's FIRS. I need FIRI. I think that's right. Yeah, because FIRI is not as good as FIRS would be on the list, but it's not an income fund. FIRS. Yeah, performance for the quarter is negative 1.47. So that number is right. That's the number I was supposed to pull. I was just looking at the wrong fund. Anyway, so this one's not that great. I mean, it's all right, but it's not doing as good as some of the other ones. It's not doing as well as some of the other ones, I should say. Yeah, it does have ULTY too. They just put all the good ones in there. I mean, same thing with ULTY. A lot of people hate it because, but I bet they use just a little bit of ULTY and a little bit of triple QI, and they sprinkle it in with some. In fact, I know they do, because when Mike Venuta was on here, he's telling me about the barbell approach, which is what that is. But anyway, and at the end of the barbell, it doesn't get any further to the end of the barbell than ULTY. That's as risky as it gets. And triple QI is pretty dang risky also. So those are on one end, but then they have ones on the other end that stable it out. So anyway, I like those. So sorry, Marcus, I don't really have a good opinion on SFOL, or I don't really know. I need to get a better handle on SFOL. I really try to specialize in the, J's funds, in the index based. The ones I talk about all the time are the ones that I'm most interested in. Triple QI and QDT, anyway, FEPI, and the ones that I'm always talking about. So anyway, but it's fun to learn about new funds. I mean, I don't have a problem with SFOL, but it just seems like it's kind of inconsistent lately or something. Let's just say, I was going to do one more test on SFOL, but let's give SFOL a fair shot. Year to date, FEPI looks better. Okay. But that's 6-7 months. Let's go back. Let's go back a couple of years. Okay. Now let's compare this. So, boy, FEPI. Let's look at dividend. So they made $19 on 51. It's about a third. These guys made 5 on 22. It's or 6 on 22. It's a fourth. So FEPI pays a higher yield and has better NAV return. FEPI is free money compared to SFOL. Now I'm going to say I don't really like SFOL that much. I didn't know that, but SFOL just getting spanked by FEPI here. Let's compare SFOL to triple QY the JP Morgan. JP Morgan's a good index for anything. Let's just SFOL to JEPI. And go back a couple of years. SFOL's beating JEPI pretty badly also, and JEPI is a good fund. SFOL couldn't beat FEPI though. Let's compare JEPI and FEPI. Did they make FEPI to copy JEPI? I mean, any of these funds, like I say, I try not to talk about bad funds. I mean, when was the last time you heard me talk about MRNI? And it's not really bad. It just has a bad underlying. But if it's something like that, we just ignore it and try to. That's why I built the max factor. Is also why I built this, because I realized that you guys aren't going to listen to me. Young guys are still going to buy it anyway. And like I say, and I get it, because if I was a young guy, I'd be trying to figure out, I'd be doing the HELOC. I'd be trying to monetize it as well. So I get it. But so if we're going to start trading these, we need to switch in and out faster. And that's what this list is for. So right now, we want to be in MSFY, NFLP, GPTY, MSFO, PLTW, MAGI, CHIPPY, NBW. 6 months from now, that list will be different. But I'm just trying to get some kind of little basic trend following where we can see which ones do better on constantly. And I think that's what the buffer report is for. The buffer report measured a 1-day performance. This is the buffer report, but it measures a lot longer than a 1-day performance. This is the buffer report that it pretty much tells you which ones are doing the best in the past quarter or the past 6 months. It's a kind of a short-term momentum indicator, right? Let's see what the worst are. How is Abney? That's got to be wrong. There's no way Abney's the worst. Is it? Did something happen to Abney? I figure that's a data problem. Error. be in. Gosh darn it. Come on. Abney. Come on, Abney. Wow. I'm always talking about being on the bad Wi-Fi or not. One of them we try to use exclusively for the node, and I try not to, but sometimes I jump onto it when it's going. Anyway. But yeah, I didn't realize there's something had gone on with Abney today. Let's just take a look at it. I mean, a 50% yield over a year. I mean, but performance for the quarter down 8.4%. Moving averages are negative, all three of them. Yeah, I guess I was wrong. I guess I was getting Airbnb, Abney, and Carvani mixed up. Carvani's a good one lately. Abney's not a good one lately. Not at all a good one lately. All right, guys, I'll let you guys go unless there's something else you want to talk about. You listen to me, Max. Only human bad financial decisions tackle the brand new funds early. I really appreciate that. Yeah. With me, it's not only that I'll tackle the brand new fund, especially if I have some type of option strategy. The whole thing I'm trying to just talk about is option strategies, but I do want to branch out, and I would like to study that QIS. I like the funds that are also using futures. I'm just not as much of an expert, but like I say, maybe Mike will come on and that would be awesome. And then I can have a chance to talk to him about options too. I'll get him on here under some other pretenses, and then I'll start hitting him up with massive option questions, right? Turn him into an option bro, or he is an option bro. Anyway, he's sparked a whole generation of option bros. Hey, but I appreciate that. I've listened to bad financial decisions a time or two also. Yeah. All right, guys. I appreciate you guys. If there's also the other thing is I love looking into this stuff. So if there's something that I need to be looking into that I don't know about yet, because you guys have seen it on Rod's Discord, a new fund coming out or something, tell me about it and I'll look into it. And you guys are pretty good about doing that. But I don't go to Rod's Discord anymore because I feel like I'm cheating on you guys, because I'm not really that into Discord. I'm not that big Discord chat. I'm not a video. Anyway, so, but what time I do spend on there, I want to spend with you guys, and not just over there arguing with people in Rod's timeline or whatever. But Rod's timeline is a great place to find out new information, but I just don't go over there that much. Anyway, so if you guys see anything, just forward it to me and we'll take care of it. All right, guys. I appreciate you all for being here, and I would later, Mark, and I will talk to you guys later. Check out that webpage if you want to see the max factor during the day or anything. And I'm going to have more stuff on the webpage eventually too. At some point, you're going to be able to look at all the trades and how much money the funds are bringing. You're going to be able to look at everything. One-stop shop for data, high yield data. All right, guys, appreciate you all. Have a great day, and I will talk to you later. See ya.